It has been an extreme 2 or 3 weeks for Tesla financial backers, as many have sold their portions because of a paranoid fear of the stock cost slumping further, while some others are as yet conflicted between selling their portions or leaving them with at least some expectations of better costs for Tesla stock in the future, as per Morgan Stanley. Musk's continuous Twitter show has been a drag on Tesla's stock value and could expose the EV producer to additional dangers in the future. Hello folks, welcome back to All That Tesla Stock. Tesla stock has experienced a few significant drops in the beyond couple of weeks. The stock cost has been on a descending pattern, raising a couple of times in the earlier weeks. While there are a few impetuses that can make the stock cost take off, there are additionally factors that represent a huge danger to Tesla stock, as well as the vehicle organization itself. So immediately here are 3 factors that might prevent the development of Tesla stock from here on out yet. Before we start, in the event that you like this kind of happy, remember to hit that like button, buy in, and turn on notices to move state of the art on everything along on with Tesla. Number 1, potential lockdown in China. There have been expanding fights of few and serious pandemic limitations in China, which addresses the world's second biggest economy, and these fights are causing new vulnerability and unsteadiness in the worldwide economy. When countries are attempting to figure out how to drop out from a conflict in Ukraine, energy emergency, and difficult expansion, this comes as China detailed a third consecutive day of more than 1,000 instances of the desire infection. As of October 24th, exactly 28 urban communities the nation over were executing some level of lockdown measures, with around 207 million individuals impacted in districts answerable for very nearly a fourth of Chinese gross domestic product. The nation over, around 200 lockdowns have been carried out lately, most of this influencing networks that have been set apart as high on medium gamble for quite a long time. China has filled in as the world's production line and a crucial motor of worldwide development, so any significant difficulty there can't resist the urge to wave somewhere else. Examination of caution cautions that more distress could additionally dial back creation in a nation, and it might support organizations in the US and Europe to separate from China and all the more rapidly differentiate their stock chains following the past event of the pandemic. The Shanghai lockdown, which coincided with closures in different urban areas, burdened China's more extensive auto market, hauling car deals somewhere near over a third compared with a year earlier, and Tesla was significantly hit by this lockdown anyway. While the automaker's Chinese opponents were giving indications of a more extensive market slump too. Their drops in conveyances and deal development were milder than Tesla's 18 dip. This is possible in view of these organizations and how they have their creation destinations in urban areas that weren't totally covered by the pandemic. NIO, which is settled in Shanghai, has its fundamental assembling site in Anwu, presumably on occasions on China's east coast, as its assembling centers beyond Shanghai could have saved the organization from the most terrible impacts of the lockdown in 2019. Tesla opened its gigafactory in Shanghai and conveyed its most memorable China-made vehicles to neighborhood clients not long before the beginning of the pandemic in January 2020. The organization anyway just started conveying a subsequent China model locally in 2021. Tesla depends vigorously on its Chinese market, and the automaker detailed its first quarterly deals to decrease in quite a while in June, uncovering conveyances dropping by 18 in the second quarter of the year, contrasted with the initial 3 months. As per Tesla, the unforgiving, drawn-out, month-long limitations in Shanghai that stopped creation at its neighborhood gigafactory were a significant justification for the stoppage, as it had to shut down its office in this area, a move that fundamentally impacted its creation and conveyance levels. One of the main EV creators in China to convey quarterly gross in the latest period is Tesla's greatest opponent in China, which revealed complete deals of 355,021 units in the subsequent quarter, flooding 21 from 291,378 in the principal quarter anyway. The justification for this isn't unrealistic. Tesla and BID are contending in a similar market, and keeping in mind that Tesla just sells unadulterated play electric traveler vehicles, BID sells crossover models as well as business vehicles like transports. Tesla has kept on ramping up production in China, and the vehicle organization has sold in excess of 1 million vehicles in China, pushing China to turn into the world's biggest EV market. Around 66% of overall EV deals are in China starting around 2021. Tesla's deals in China were almost a portion of what the automaker sells in the US. The vehicle organization reports deals of $3.11 billion in China in the second quarter from last quarter, which is around 48.5% of the $6.41 billion deals in the U.S. during that time. Tesla likewise as of late conveyed 83,135 China May EVs in September, crushing its month-to-month record. This number was an 8 increment from conveyances in August, and it set a worldwide best for Tesla's Shanghai processing plant since creation started in December 2019. China is the world's biggest auto market and a significant objective for worldwide brands, which is why Tesla keeps on putting resources into creation in its market. Thus, with one more lockdown on the manner in which Tesla likely could be nearly losing creation, which will subsequently influence edges over the long haul. Number 2. Gamble. A Musk selling more Tesla shares. One major danger to Tesla stock right now is the chance you should sell more offers. The Tesla president sold just about $22 billion worth of Tesla shares in 2021 per year, when the stock jumped over 50%. Similarly, Musk sold more than $8 billion worth of stock in April, and about $7 billion worth in August prior to this year, when he got some information about the chance of selling more Tesla shares. Musk let fans know that he was finished with selling. Tesla offers to support his Twitter procurement bargain. He expressed in a tweet that he had offered the offers to bring assets up in the event that Twitter powers this arrangement to close and some value accomplices don't follow through, in which case it is essential to stay away from a crisis offer of stock. This was done when Musk was all the while fighting the web-based entertainment organization in court, attempting to escape the arrangement. The Tesla chief at last obtained Twitter and again sold more. Tesla offers to subsidize his Twitter project as per U.S. administrative filings. Musk sold $3.95 billion worth of Tesla shares days after he purchased Twitter for $44 billion. The now Twitter president sold 19.5 million portions of Tesla, as per information from the Protections and Trade Commission. Tesla has lost almost 50% of its reasonable worth since Musk's offer for Twitter in April, and a few examinations have not kept down on voicing their dismay concerning the arrangement Tesla offers, and there is no assurance that he's not selling them again. Number 3. Weighting macroeconomic circumstances. Tesla's production network gives better results compared to a large portion of its competitors, and a few examinations expect areas of strength for the present before very long as it extends yield to the vehicle creator. Disregarded the monetary disturbance brought about by the pandemic while detailing mind-blowing quarterly benefits. In July, the organization's president Musk said that Tesla didn't dislike client interest. He had basically an issue making in transportation all the Model Ys and Pris that customers were prepared to purchase anyway. While Tesla is by all accounts padding the impacts of the brutal economic situations very well, the stories may be changing as pointers that the vehicle organizations are being compelled to answer a harder market examination are beginning to see early indications of wariness for the world's most important vehicle organization, particularly for its undeniably superior estimating at a time where the worldwide economy is easing back and assumptions for worldwide car deals are being toned down. The Federal Reserve is likewise set to continue to increment loan fees in light of expanding expansion. The central bank had recently cut loan costs in the midst of the pandemic, yet it is currently organizing the most forceful competition to bring costs up in 40 years. The U.S. National Bank has of late raised loan fees by 3/4 of a point, interestingly this year authoritatively bringing the benchmark loan fees to an objective scope of 3.75 to 4%, the most elevated since mid-2008. The Fed said it will probably go on with the loan fee climbs until there are indications of quieting expansion anyway, albeit another climb is close to 100%. There is plausible that this time the Fed will settle on a 0.5 rate point or a 50 premise point move as per the central bank lead representative Christopher Waller. He is available to lessening the degree of financing cost climb soon insofar as the monetary information coordinates. While it is great to zero in on Tesla's basics as an organization while pursuing decisions as a financial backer, it's in every case best to assess the possible dangers of an organization's development, to all the more likely be ready for what might come. How about these elements in any capacity influence Tesla stock valuation? Let us in down underneath, and remember to let us know your valuation of Tesla. If you have any desire to know more about what Tesla's been doing over the most recent couple of days, feel free to tap on this next video on your screen. See you there.